Okay, guys, we're going to get into the Bitcoin super cycle and why the traditional 4-year cycle, in my opinion, is breaking. We're going to go into it in full detail so you understand everything that's going on and why you've heard the rhetoric and why people are talking about it. So, the Bitcoin super cycle, why this time might be different. Contents. What are we going to be talking about? Well, we're going to be talking about debt and money printing, institutional demand, breaking the 4-year cycle, the AI revolution, tokenization and stablecoins. I'm sure you guys have all heard about this recently. Demographics and trust shift, the reality check, and a summary. This is in depth, guys. This is probably going to be one of the most in depth Bitcoin supercycle videos you're going to watch. So you're going to want to hang around here. So let's begin. Debt and money printing. Unsustainable debt. Western economies are buried in record breaking debt. We all know this. The US national debt is now over $34 trillion. Interest payments are now one of the biggest government expenses. Governments have no politically viable path to reduce debt. And this means they will continue debasing the currency as they have done through inflation, which is the printing of money. The US dollar has lost 99% of its purchasing power since the Federal Reserve was created. We have already seen countries like Argentina and Turkey lose purchasing power of their currency in real time. The US dollar and other major currency fiat collapse is almost inevitable long term. Fiat incentives. Politicians only care about re-election. That means more printing, more bailouts, more handouts, no fiscal discipline. Fiat money is a system that rewards short-term thinking and punishes long-term responsibility. Bitcoin is the complete opposite. Bitcoin is power. In a world where fiat is guaranteed to lose purchasing power over time, Bitcoin becomes the lifeboat. It's got a fixed supply, it's got a predictable issuance schedule, it offers certainty in a system built on lies. This time, more people understand that, and they are front-running the collapse. And you can see here, global debt is approaching 300 trillion fast. It's really crazy. The US debt, as we said, is 34 trillion. Interest payments are now one of the biggest government expenses. This is not sustainable. So the second reason why, in my opinion, we're going to get a super cycle. Institutional demand. Well, we all know this. ETF inflows, spot Bitcoin ETF inflows from BlackRock, Fidelity, and others show that Bitcoin is now an accepted asset for serious players, and this legitimizes it as part of a standard portfolio construction. Even for conservative funds, the US dollar spot ETFs now hold 1.3 million Bitcoins, which is around 6% of its total supply, which is a ton. There's a new buyer class. Bitcoin is no longer just retail and crypto Twitter degens. It's now pension funds, sovereign wealth funds, asset managers allocating billions. Fortune 500 companies are literally allocating 1 to 2% of its reserves to Bitcoin. So even a 1 to 2% treasury allocation would create billions of demand. So the volatility is there, but the floor is being raised by larger and more sophisticated buyers, which is why it is currently 13th of September 2025. You'll see this current cycle that we've had. You'll see the compression. Bitcoin ranges and then breaks out. Ranges, breaks out. It no longer has the volatility in the last cycles that we saw. This new pattern that we've seen in this cycle is completely new for this exact reason. Because there's a steady amount of supply and demand coming in. Breaking the 4-year cycle. A structural shift. Well, historically, Bitcoin has followed a predictable boom-bust pattern tied to halving cycles. But as the market matures and capital inflows change, the rigid 4-year rhythm is breaking down. The new demand, as we just said with ETFs, is an institutional gateway and global exchange access. Bitcoin is more accessible than ever, and it no longer needs retail hype cycles to move. Capital can flow in at scale independent of halving narratives, and this smoothens out the volatility. And we're going to get to what all of this means, because you're wondering, I'm giving you all of the bullish points. All of this ties together into why we're going to get that super cycle. I'm going to tie it all in a little bit later. A mature market. we are less likely to get huge drawdowns like we did in prior bear markets. If you guys recall, maybe 2015, 2019, 2018, really, really horrible bear markets. We're likely to get shallower corrections. Bitcoin will soon begin trading more and more like mature markets like the S&P 500. So, the AI revolution. AI versus white-collar jobs. Millions of knowledge workers will be displaced by AI over the next 10 years. Productivity will soar, but wages will stagnate. This creates a growing class of individuals who benefit less from wage growth and instead turn to hard assets like Bitcoin to store value out of desperation. AI portfolios. As AI systems begin managing investment portfolios, they will allocate capital purely based on data Sharpe ratios, correlation matrices, risk-adjusted returns. Bitcoin will get bought on merit, not emotion or narrative. The inflows will be cold, logical, and relentless. The deflation leads to quantitative easing, and quantitative easing is the printing of money. AI will make the economy more efficient. Prices will fall as productivity rises, as we said. But deflation is a threat to debt-based economies because, you'll get deflation when when everything's a lot more efficient, right? Prices will fall. So governments are going to have to be forced to print money in order to hit their inflation targets. So that means there'll be a permanent money printing. This is going to become even more the norm, which is going to debase the currency even more. Bitcoin is native to code. This is the last point of the AI revolution. AI trusts code, not politics. It optimizes for transparency, immutability, and integrity. Bitcoin is the perfect monetary protocol for the AI age, a system that runs on code, not human trust. Tokenization and stablecoins. This has been very, very hot recently in the news. So global on-chain money. In 2024, the amount of transactions that was settled with stablecoins nearly reached 28 trillion. Did you guys know that? 28 trillion. Bigger than Visa and MasterCard combined. Stablecoins have leapfrogged the banking infrastructure. It's just quicker and easier to transact through stablecoins. It's completely legal. In many countries, people trust USDT more than their local bank. Bitcoin is the anchor. Everything moves on chain. Bitcoin serves as the base layer of the gold standard. People will trade stablecoins day to day, but accumulate Bitcoin as their long-term store of value. Programmable finance. Tokenization means that every financial asset can exist on chain. Bonds, stocks, real estate. We're seeing this already with RWA projects, real world assets. But you need a base asset to settle into, and Bitcoin, with its immutability and neutrality, is the prime candidate. And here is a chart here. This is by McKinsey Consulting. And you can see that the US dollar pegged stablecoin transaction volume in trillions. So you can see it really didn't have any volume in 2019, 2020, and 2021. It had a big spike in the bull market, bear market. It was steady inflows. And then when we started the bull market in 2023, 2024, we had a large spike. And look at this. Really, really impressive inflows. Very, very bullish for Bitcoin. Demographics and trust shift. Boomer wealth is rotating. $84 trillion is expected to pass from boomers to younger generations over the next 20 years. Gen Z and millennials don't trust banks or governments as much as boomers. They trust code, decentralization, and digital ownership. They are internet natives. So the current worldview for the younger generations is digital first. They don't ask, why would I use crypto? They ask, why wouldn't I? That mindset shift is already underway. And it's important to understand this. I don't really hear enough people talking about the demographics and trust shift. Boomers are going to die off. They're going to pass away, and that wealth is going to be transferred to the younger generations who are more tech savvy, internet natives. They're going to be buying Bitcoin. But the reality check, well, the drawdowns aren't over. And this is where we tie it all together. All of this doesn't mean Bitcoin will go up in a straight line. That's not what the super cycle means, guys. There'll still be drawdowns, there'll be flash crashes, there'll be FUD and shakeouts. Don't mistake macro tailwinds for invincibility. However, the super cycle might not start right away. In my opinion, we're going to have one final bear market in 2026, perhaps 2027. But then after this, I'd expect a super cycle pattern of Bitcoin to begin playing out. So if you have spare capital, I would advise you to wait until 2026. Buy heavy, because that might be the generational buying opportunity that you have before Bitcoin takes off. It has shallow retracements and it goes all the way up to $1 million per Bitcoin soon. Altcoin cycles will exist. So Bitcoin may lead the super cycle, but altcoins will still pump and dump. You need to be more careful. And we know this already. There's a influx, too much supply of altcoins. The attention and liquidity is fragmented throughout these altcoins, which means that they're more volatile and more susceptible to market cycles. Whereas Bitcoin is just one of one, as Michael Saylor says. There is no second best. Regulatory FUD will return. Politicians will attack Bitcoin again. There'll be ESG concerns, mining bans, capital controls. But each time that Bitcoin survives, it comes back stronger. So the summary. All roads lead to Bitcoin. In an age of sovereign debt collapse, AI acceleration, and trust erosion, Bitcoin is the only financial asset that aligns with the long-term survival, transparency, and neutrality that we all desire. The super cycle isn't guaranteed, but it's more likely than ever based on all the points I've given you. When capital inflows, macro tailwinds, and technological revolutions all converge, that's when history is made. So be ready. Most people won't believe in the super cycle until it's too late. I've just told you guys, 2026, you got to bid Bitcoin hard. By the time they accept it, the opportunity will be gone. So your job is to see into the future like we've just done before everyone else does. Have a lovely day, guys. Bye-bye.